Right. Welcome back. Welcome back to another weekly video. So in this session, we're going to build on what we covered in our weekly mentorship, the one that I uploaded, I think it was on Monday. So the narrative hasn't changed, right? We are still anticipating weakness in the US dollar index. But today, I want to take it a step further. I want to show you why that weakness is forming, not just from a price point of view, but from what's happening underneath the market, specifically looking at the long-term interest rates, right? Specifically looking at the long-term interest rates. Because once you understand this, right, you stop reacting to price. You stop reacting to price and you start anticipating it, right? So let me just quickly go to the platform there. So the long-term interest rates that I'm talking about is the 5-year, the 10-year, and the 30-year yield, right? So there is an engine behind price, and that's from a macro point of view. There's an engine behind the price, right? Most traders, they focus only on price charts. They focus on the technical side of the market, right? But price is just the final expression of deeper forces that are behind that whole movement. So we're talking of things like liquidity. We're talking of expectations in the market. Most probably you can refer to it as sentiment. And then you talk of interest rates, right? And one of the most important drivers, or a catalyst, if you may say, of the dollar index is the relationship between the long-term rates. So we're talking of the relationship between the 10-year, the 5-year, and the 30-year. The relationship that those three interest rates triads have that can help us in determining dollar index directional bias. Now, think of these as a consensus view of the future. You see, they basically give you a head start on what's going to happen in the future. Now, tip number one, I'm going to be giving you tips throughout this whole recording. It's not going to be that long. I'm going to try to make it as short as possible because I've noticed not many people do watch, but try to watch, guys. Tip number one, price is reactive. Yields are predictive, right? That's the nugget you have to take from this first section. If you learn to read yields properly, you will often see the move before it shows up on dollar index, just the same way that I explained on Monday. I'm not going to go back into that, but I kept on reiterating that the strength we are seeing in these long-term rates is not real strength, you see. It's strength that was based on stagflation, right? So SMT divergence on the yield curve, right? Let's talk about what we are currently seeing, right? What we are currently seeing in the markets. So just from a glance point of view, you can see these three interest rates triads. We can clearly see, right? So this is the 5-year. 5-year made a new high, right? 5-year made a new high. Let me just close this. This guy is disturbing me. 5-year made a new high, right? If we go to the 10-year, right, you can see that the 10-year did not, right? And all these highs that I'm marking, they correspond to one another. And if we go to the 30-year yields, right, you can see 30-year yield made a new high. That's crucial, right? I'm just going to do this. So this is from a trading viewpoint of view, but I'm also going to do it on investing.com which is what I normally prefer because you can have the charts easily side by side. So I'm going to go to my watch list on investing.com, and I'm going to go to the yields, right? And I need the 5-year, right? This is something that you can always try to do. And for those in the mentorship, you already know. It's not like you do this every day, right? You can do it like at the end of the week or at the end of the month, right? Meaning of a period of a month time. You can only look at the yields most probably like 4-5 times max. Yes. You're not going to use yields to look at, say, 15-minute chat or 30-minute chat, 1 hour chat. No, that, yeah, you can do it, but that's that becomes a bit irrelevant to the strategy that we use. Remember, money flows in the long term determines what happens in dollar index, and when we look at it from a higher time frame point of view, that can give us a directional bias of a period of, say, maybe a month, 2 months, or even the whole quarter. So you can see there, I have gone to the layout. I've got 3 charts side by side, right? Now you can see we still have 5-year on across all the 3 charts. So I'm going to put the 10-year in the middle, right? So I'm going to change the status symbol there. So that's 10-year, right? So in the middle, we now have 10-year. And then the last one, the third one to the right, that will be the 30-year. So I'm just going to put them chronologically. You can have the 5-year on the first chart, 10-year, the one in the middle, and the 30-year, the one on the right, right? Now, look at this. This is what's interesting, right? If you look at TradingView, the 30-year made a new high, the 10-year did not make a new high, and then the 5-year did make a new high. And this is on the 26th of, the 4th of May, right? This is all on the 4th of May. Now, if we go to investing.com, right? Let's go to investing.com. This is going to be quick, guys. Don't worry. It's going to be quick. It's not going to be a long one, because it's this kind of narrative that gives you a good head start in the market. Like what you do translates to dollar index and ultimately to the currency pairs. So you can see the 5 and the 10, they're in agreement, right? And then the 30-year, right? The high of 27 March, up until the high that was formed, on the 4th of May. The 30-year is the one that's not in agreement. But now this is price is fractal, guys. So you can see that wherever, if I go to TradingView, you can see here, these are TradingView pricing right here. That's the TradingView pricing, right? So if I go to NZD-USD, this is from Owanda, the broker Owanda. But if I go to the 5-year, this is TradingView price engine, right? So the one on investing.com, I'm not sure which one is this, and this one is saying New York Stock Exchange, right? So this is the New York Stock Exchange price engine. So the highs are different, but be that as it may, what we can practically see from this is SMT divergence in the long-term interest rates. Remember, I mentioned that the strength that we were seeing in these long-term interest rates wasn't a real strength, and we went deeper in the last mentorship video explaining why is that the case, right? So having identified a clear SMT divergence across the yield curve, right? The 30-year yields made a new high from investing.com point of view. The 30-year yield made a new high. The 5 and the 10 failed to make corresponding high, and that's on the 4th of May. They failed to make a corresponding high at the same time that the 30-year yield was creating what? A new high. Now, what does this mean? This is not a confirmation, guys. This is disagreement. That's the SMT that we speak about. And in smart money terms, disagreement equals opportunity, right? You have a whole field of where you're going to be looking for opportunities, right? Now, tip number 2, take away from this, right? When correlated assets stop moving together, the market is either distributing or preparing for a reversal, right? This is how smart money exits positions without panic, right? So the 30-year pushing higher alone suggests that long-term expectations are what? Are shifting. But the rest of the curve is not confirming the strength, meaning the 5 and the 10-year. That means this is not bullish. That's a fragile structure, right? How then do we translate this to dollar index, right? How then do we translate it to DXY, right? So now we bring it back here to the US dollar index. If yields are not aligned, the dollar does not have strong macro support for moves to the upside, right? The dollar does not have strong macro support for it to keep moving to the upside, right? The confluence with price action is that this is where things get clean, right? Because what we are seeing on DXY, lower highs, weak retracements, no impulsive continuation, right? No impulsive continuation. So now we have SMT divergence warning, yields weakness from a macro confirmation, right? Which is what I've already been talking about. Yields weakness, structure shift, right? That's a technical confirmation. We already have a structure shift on this daily time frame on dollar index. Now that's a complete narrative. The narrative being that dollar is going to be weak going forward, right? So retracements shallow. You can see the market tried to do a retracement. Monday's open. Then yesterday, Tuesday, a very small bullet candle trading into what? Into fair value. What fair value, Ivan? We've got a fair value gap here, right here. We have a last up close candle before this expansion to the downside, right? That's a shallow retracement and an expensive move to the downside, which we have seen already today, which then results in your position across the other asset. Longs on euro, longs on pound, longs on Aussie dollar, longs on New Zealand dollar, and vice versa. Shorts on UJ, shorts on USD CAD, shorts on USD CHF, right? So the nugget to take from this: never trade structure alone. Structure tells you what is happening. Macro tells you why, right? Structure tells you what is happening. Macro tells you why it's happening. When both align, that's when size becomes justified. That's when you justify your positions. That's when you justify your trades, right? Sell models on all pairs like USD CAD, UJ. You can see how UJ flashed to the downside today. Let's go to UJ. Let me just, you see, from fair value, UJ dropped. Same applies if you look at USD CAD. Okay, there's a bit of strength in CAD, most probably fundamental. Something has happened. But prior to that, prior to this move to the upside, CAD had already moved lower. Let's go to USD CHF. You can see USD CHF, Monday, retracement into fair value. Today, yesterday, run off stop. These are relatively two equal highs, right? And then flash to the downside. We have change in structure there. From Thursday candle, we have CISD right there. Then price retrace and pushes to the downside, right? So reading price action with macro context. This is where I want you to sharpen your eyes, guys. You need to be in a position to see and read price with a sharp eye, right? What to look for now on DXY going forward. What you look out for, right? Weak bullish candles. What do I mean by that? Small bodies, look at yesterday's candle. Long wicks, look at yesterday's candles. Small movement, look at yesterday's price action. Just gonna go on to the 4-hour chart. Look at yesterday's price action since Monday, right? Look at yesterday. There was slow movement. This equates to lack of conviction, right? Number 2, what you have to look out for on dollar index: failure to expand. Price pushes up and then stalls. This is distribution, right? This price action that we saw from yesterday, this is distribution. Market opened, right? Market opened and then expanded to the upside. This is market open, expands. That's the push to the upside. But then it stalled the whole of Tuesday. Market stalled. Then look at Wednesday. Boom. An expansion to the downside, right? Number three, respect of supply zone. Price taps into premium and then reacts. Price taps into premium and then reacts. This equates to smart money selling into strength. This whole distribution, smart money was selling. Retail market was anticipating a continuation of this upside movement, right? Retail was anticipating a continuation of that upside movement. Your nugget to take from this, or your tip: strong markets don't hesitate, right? If price is struggling to move higher, it's not accumulation, it's distribution. Now, translating to FX pairs, right? This is where you move from analysis to execution, right? So if DXY is weak, we want to be buyers in all the pairs that have got dollar index as your core currency. So we're talking of currency pairs like Euro USD, Pound USD, AUD USD, and NZD USD. You want to be a buyer in those points, in those currency pairs, right? For instance, NZD USD, the one I sent on the group, I think it was this morning, if I'm not mistaken. You can see how price traded into fair value for longs, right? It was yesterday. Yeah, that was yesterday. It was yesterday. Today's Wednesday. It was yesterday. This expansion, see, this move to the upside. When I reiterated that, for those who have watched the mentorship video, you can see there longs. Even today, price did tap again back into fair value for longs, then expands to the upside, right? So you'll be looking for retracements into fair value. You can already see there, that's a retracement from yesterday. Market open, expands into fair value, into discount, for price to push to the upside. The primary pairs that you have to focus on, yes, you can have NZD, you can have AUD, but try to focus on Euro and Pound. Ideally, these are the pairs that you'd want to focus on, and also gold as a commodity, right? You want to have your eyes on those three, because if dollar is weak, these three that I've mentioned already, Euro USD, Pound USD, and gold, they're going to be bullish, right? Now, the execution model that you have to use. Now, this is where discipline comes in. I've noted a lot struggle with that. You have to be disciplined in a way you execute your trades. We don't just buy because the bias is what? Is bullish. No, we wait for the following. Number one, pullback into discount, retracement, liquidity sweep, a stop hunt. You wait for displacement, a strong move away. You wait for structure shift. All these things here, structure shift, you wait for it on lower time confirmations. If you are executing on H4, for instance, you want to go as low as maybe 30-minute time frame for structure shift. Say for instance here we are on pound USD. You can go to any pound USD or euro USD, but I'm just gonna go on pound USD. You can see there was a retracement into fair value for what? For longs. Now this is pound USD. Where is the long position here? Inside this price action, even inside this candle, we have an expansion from discount. This expansion, what does it create in relation to technical point of view? We have CISD there. Change in what? In structure, right? That's a structure shift. But now this is on H4. If we go to lower time frame, it will be more defined. Now I'm on 30-minute time frame. This move to the upside, there was a structure shift. All these retracements here into fair value, right? That's your execution model. So you can also go to say H1. You can use H1. This move to the upside, structure shift, retracement into fair value. Boom. Market expands to the upside. The nugget to take from the execution edge is this. Your edge is not the direction. Your edge is waiting for the market to confirm your idea before committing your capital, right? You have to be in a position to do that. Confirm your idea first before you commit your hard-earned capital, right? Now, you need to be in a position to map this out like a professional, right? So we're talking of scenario-based thinking here. Examples that you can use, right? I'm going to give you like 2 or 3, right? The primary being that dollar is bearish, right? DXY has to push slightly higher. What does this tell you as a trader? If DXY is bearish and then it starts moving to the upside, what does this tell you as a trader? It means it's tapping into liquidity, right? DXY is tapping into liquidity. This is the primary scenario. It taps into liquidity and then sells off. In the meantime, on Euro USD now, you need to see a pullback, then expansion to the upside. You can see there from Monday open, DXY was tapping into liquidity. What kind of liquidity, Ivan, are we talking about? Internal range, buy side liquidity. At the same time, Euro USD had a pullback, right? A pullback and then expansion to the upside. You see, expansion to the upside. That's your primary scenario right now on dollar index. What you have to be looking out for on dollar index. Tap into liquidity before it expands to the downside or sells off. And then on the currency pairs, Euro USD, for example, you need to see a pullback and then the expansion to the upside. That expansion to the upside is your trade, right? Scenario number 2. Now, this is where you have to be aware of deeper manipulation, right? DXY expands higher than expected, which we haven't seen right now. Take note, I'm on the H4 chart, which is my entry time frame. I haven't seen a deeper expansion here. We saw it last week, right? We saw it last week open, where the deeper expansion on market open. Now this is deeper manipulation. That was just a manipulation there, right? The moment DXY does this, you want to see Euro USD sweeping old lows. You want to see Euro USD hits deeper discount and then rallies to upside, right? If we look at last week's open on Euro USD, where's last week open? Last week, right here. Yes, I think that's Thursday, 30th of April. Okay, this is already this week. Let me check my dates correctly. I don't want to mention the wrong stuff. So we're talking of the open of 27th, right there. That's Monday, right here, right there. DXY opened an expansion to the upside. Euro USD was just in fair value, then it expands to the upside, then moves lower. You see, so there was deeper manipulation on dollar index, right? There was deeper manipulation on dollar index. Yes, so the tip to take from here, the best trades usually come after pain, right? If everyone is comfortable buying, you are probably early in that position. Now, things that you have to avoid, like common mistakes that most people do. Don't chase moves after expansion. Say, for instance, today, you're trying to chase the expansion that we have already seen today since market open. Don't ignore liquidity. Don't trade against the macro narrative blindly. Do not ever do that, because you're going to be the liquidity. It's that simple, guys. So don't trade against the macro narrative, right? The nugget to take from this, or the tip to take from this, is that most losses come from impatience, not bad analysis. A lot of people are very good at analyzing the market, right? But being impatient, that's where most losses happen, right? I want you to shift your thinking, right? A retail mindset will say, where's price going, right? That's a retail mindset. Now, I want you to have a professional mindset. What conditions need to form before I enter, right? What conditions need to form before I enter? You don't get paid for being right, right? You don't get paid for being right when we're talking of the markets. You get paid for being positioned correctly when you are right. You see, you don't get paid for being right. You get paid for being positioned correctly when you are right, right? So bringing all this together, right? In conclusion, bringing all this together, guys, SMT divergence on the yield is signaling what? Weakness. That weakness translates to dollar. That's that weakness that we are seeing in that SMT divergence that we are seeing in the yields signals what? Weakness. That weakness translates into DXY. DXY being weak, the opportunities lie in the currency pairs. There will be a lot of opportunities in currency pairs that are paid with dollar as the core currency, or that are paid with dollar as the base currency. Now, your job is very simple. Stay patient. Wait for confirmation. Execute with precision. And most importantly, guys, I know this is something I keep on repeating. Most important, guys, go back to Monday's mentorship video. Combine it with this one here and start training your eye to see this in real time, right? You can do that for the rest of this week or even next week, right? So that you understand, right? If you can understand this, you are no longer just trading charts. You are trading intermarket relationships and capital flows, right? So yeah, drop a comment or send me a message I want to see who's actually applying this in live market conditions. So with that, guys, I wish you good luck and happy trading. Thank you.